Okay. So remember that we have a test Friday. Today is our last new day of content. Tomorrow is review on weight ground. Thursday is review on weight ground. Friday is our test on Unit 10, which means that any work that you have not turned in has to be turned in by Friday at 7 a.m. Okay? I can give you late credit or makeup. If it's makeup work from an excused absence, I can give you full credit if it hasn't been too long. I can give you up to half credit if it's just flat out late. But after Friday, I can't give you any credit. Everybody's clear on that, right? Okay. I feel like this whole unit, we keep talking about the same things, right? And today is really no different. We're talking about deductions, credits, and income statements. You've been talking about that the whole time. You've been reading articles, looking at infographics, doing the ed puzzle thing, all different ways. Because this is a super important unit. When you were a kid and in your least favorite math class and you asked your teacher, how am I going to use this in the real world? Well, you're literally going to use this in the real world every day. You need to know about your taxes, right? So we are coming at it from a bunch of different angles, but talking about a lot of the same things. So it says we'll be able to use information on a pay stub, W-2 form, and 1099 form, which we've worked with all of those already. Understand how to report different types of income using Form 1040. We've reviewed that form a lot. We've gone through it, and we're going to review it a little bit at the end of our notes today. Why is your take-home pay lower than your salary or wages? Do we know that already? Why is it, Layla? Because of taxes. Could also be when you have benefits that you pay for deducted or retirement funds. But yes, the biggest thing is your tax. The taxes have to be paid. How can you compute your tax liability? That's something you need to know. We've been doing that. We did that yesterday for Ashley, Elise, and Jameson using W-2 forms and the 1099 forms. So we're talking more about it, talking about some more the terminology again. The tax deductions are things that reduce your total taxable income. You can't just subtract them off of your tax bill. You subtract these from the total income before calculating the taxable income. Tax credit. Yes, ma'am. Tax credits are things that reduce your total tax due. So you subtract these from the total tax after calculating your taxes owed. So you owed $5,000 in taxes, but you have a $1,500 child tax credit or that American, what's called, that tax credit for college kids or that credit, whatever, then you subtract that directly from your taxes owed. You don't have to pay that. Given the choice, do you pick a tax credit or a tax deduction? Most times you're going to pick the tax credit. All right. You by now should be able to match A, B, C, and D with 1, 2, 3, and 4. None of these are new terms. So see if you can, and then we'll talk about them. Be less boring and quicker if you guys go ahead and write an A, B, C, D first. You can draw them on if you want, but if you get it wrong, it's a change or redo. All right, anybody feeling particularly confident about one of them? Layla? 2 is D as in dog or B as in boy? D as in dog. Yes, your pay stub or paycheck, list your wages, hours worked, taxes, and other deductions. All right, anybody else feeling confident about one? I don't know who that was. Who was that? 1 is C. so your federal, state, and taxes, local taxes withheld from your pay, paid to the government on your behalf by your employer. Okay, can you tell me one of the others?
3 is A.
3 is A. That's what you make before any deductions or withholdings are taken out. And then that leaves us with net, which is your gross pay minus your deduction, or what you make after any deductions or withholdings are taken out. We usually call that your take-home pay. We have talked about the W-4 form. Raise your hand if you filled out a W-4 form before. Raise your hand if you have a job or have had a job before. But if you have a job or have had a job, you have filled out a W-4 form. By law, they cannot let you start working until you filled out this form. So it's filled out by an employee and gives directions to the employer on how much money and taxes to withhold from your pay each pay period. You can have them not take out any taxes. That does not mean you don't owe taxes. That means at the end of the year, you may have to pay all of your taxes at once, though. So the reason why employers take that tax out each pay period is so people don't have such a big bill at the end of the year to come up with, right? Form W-2. So if you have a job where you're not working for a family member that pays you cash, everybody receives this Form W-2, which is a year-end tax statement. They are legally required to give it to you by a certain date the following year. So right now we're all getting ready to do taxes for our 2025 income. You should have your W-2 form. It should be provided, or you should have digital access to this form by your employer already. It's a statement that the employer puts all your withholdings of income on, and it's used to file your taxes. Covers wages, salaries, and tips. And then the 1099 form, that's the one we computed Jameson's taxes with. It shows income. This is the one I think of most from contract work. It also shows income from royalties, stocks, and other non-wage sources. So if you are a subcontractor, that means maybe someone's building a house and you are a plumber. They hire you to come in and do the plumbing. You don't actually work for that person. You're not part of their company or business, but they have hired you. You are contract work. They will give you a 1099 form for the money they paid you for that part of the job, for your part of the job. Caught up with me? Okay. Tax-deferred contribution. So stuff you have taken out of your paycheck now and you get taxed on later. Usually, both of these two things are tax-deferred contributions, so we'll just go ahead and talk about those now. I think this is the most famous. Most people have heard of a 401k plan. It's a retirement plan. Your employer sets it up for you, and they can contribute money to your 401 plan. You can contribute money to it. Sometimes they have matching plans. If you contribute some, they'll match that amount. That can be a benefit when you're looking for a job. You don't pay taxes on it. So for instance, any retirement funds that we deposit money into in 2025, Coach remember that, and we're not taxed on that income. However, when we retire and we pull money out of that 401k plan account to pay our bills, we get taxed on that money at that point. Does that make sense to everyone? So it's tax deferred. We earn the money now, but we pay taxes on it later. And then this is a flexible spending account. Typically, it's set up for, it is set up for just medical expenses. So it's your money that your employer will deposit into an account for you, and you get to tell them how much you're going to deposit, and they don't tax you on it, right? And you don't really, you pay taxes on the items that you purchase, so the medical help. So let's say you need a pair of crutches, and you go to CVS and buy crutches. you could use your flexible spending account for that. You're going to have to pay sales tax on it, but you didn't have to pay income tax on it. Does that make sense? Also, prescription medicine, even if you have health insurance, you have to pay a copay for it. You have to pay a certain amount. It's not the full amount of the drug cost, but you have to pay some of it, and you can use your flexible spending account for that as well. They usually give it to you like a debit card. This says it's a use it or lose it plan, and I don't think they are all use it or lose it anymore. Use it or lose it means, let's say I asked Leanna County Schools to deposit $50 from my pay each month, so that would be $600, right? I spend my money on medical supplies from my flexible spending account, but I only spend $450, so there's $150 that I didn't spend. Used to be, that account went to zero to start the next year, and you just lost that money. Right now, the County Schools FSA account is not like that. You don't lose it, so you definitely want to make sure you know the specific details. Once you get to be an adult, you might have one of those accounts. All right. We are going to talk about gross pay and net pay and how it's computed. Barb started a new job, and she wants to make sure she's getting paid the right amount. Her gross pay is $269.75, and she has a list of deductions which include, I want you to scratch out FICA tax. It's actually Social Security tax. Scratch out FICA and put capital SS. FICA is actually Social Security and Medicare, so this is Social Security. So 6.2% of this amount, 1.45% of this amount, her gross income, and then all these other deductions. So federal tax, state tax, retirement insurance, disability insurance, medical insurance, and dental insurance. You don't have to pay tax on those amounts that you pay for some medical insurance. So we're starting with her gross pay. It's right here. $269.75. Now we've got to figure out her deductions. The first one, everything is a list amount. You don't have to do any computation except for these two. So we need to figure out what is her Social Security and Medicare tax amount. We know it's the percent of her gross pay, and so we can actually add 6.2 plus 1.45, and we get 7.65%, so we can combine those. And now take that 7.65% and multiply it by her gross pay. $269.75 times 7.65%, and that amount is $20.64. And then everything else is just listed. I would encourage you, I may seem like a Captain Obvious thing, but I would encourage you to go ahead and write the list down, not just the total. When you get on the test on Friday, you might go, where the heck did $114.33 come from, right? So make sure you're listing everything. This is her federal tax withholding, her state withholding, her retirement insurance, her disability insurance, her medical insurance, and her dental insurance, right? So for a total deduction of $114.33. So her net pay is gross minus, not deductions, but deductions. I've looked at this 3 times a day, and that's the first time I saw that. So gross pay $269.75 minus her deductions for a net or take-home pay of $155.42. Right, the next example, we're also going to cross out FICA and write Social Security, or SS, to abbreviate Social Security. So the Social Security tax, so the Social Security tax and the Medicare tax are always the same percent for the same year, same tax year. I don't know what they are right now. They may still be that same amount. Randy works for Blake Corporation. So we're basically doing the same thing again for Randy. Except they give us his annual salary of $57,285.50, and they tell us he's paid biweekly, but then they give us deductions for each pay period. Okay? So each pay period, they take out 6.2% and 1.5% of his gross income, $418, blah, blah, blah. But we have just his annual salary. So we need to convert his annual salary to the amount he makes biweekly, if that's the pay period, okay? How many times a year does he get paid if he gets paid biweekly? How many weeks are there in a year? 52, right? So if he gets paid every 2 weeks, there's 26 pay periods in a year. So we have to know that. So the first thing we're going to do with his gross income is we're going to convert it. So this is his pay period amount. We're going to convert it to a biweekly amount. $2203.29, $2,203.29. How do we get that? We take his annual income and divide it by 26. His gross annual income divided by the number of pay periods in that year, and that gives us his biweekly income to match up with his deductions from that same period. So now we're going to find his deductions. Once again, we're taking that 7.65%, or 0.765 is the same as 7.65%, just to remind you. Multiplying it by his income for the pay period, gross income for the pay period, and that's $168.55. So this is his Social Security plus Medicare. And then everything else is just listed. So federal withholding, state withholding, forget what the 2272 is, retirement insurance, disability insurance, medical insurance, and then dental insurance. So his total deductions, $742.36. And we're going to find his net pay by taking his gross and subtracting the deductions for the pay period. So his net pay looks like retired to me. Net pay is $1,460.93. That can also be called his take-home pay. Any questions? All right, ready to go on? Okay. Lorna's bi-weekly pay stub shows that she paid $1,001.47 in federal taxes, $280.89 in state taxes. Assuming her salary and deductions remain the same throughout the year, how much will be taken out of her total annual gross salary for federal and state taxes? So this is one of those occasions that give us a number we don't need, right? We don't need to know what she gets paid. We need to know her federal taxes and her state taxes, but this gives them, oh no, I lied. This is not her income. We do need this number. This is her federal taxes. This is her state taxes. So we need to find the amount that she pays for the entire year. Once again, it tells us she gets paid biweekly, so we should remember that there are 26 pay periods. Every 2 weeks she gets paid. So we're going to figure out how much she paid in federal tax. We take that amount and multiply it by 26. For the state taxes, we take the 280.89, multiply it by 26. We are going to add these together because it asks for the federal and state taxes for the year. The federal taxes are $26,038.22. In case you can't read my handwriting, that's a zero. And the state taxes are $7,303.14. And I think it's $33,431.36. Yes, I just saw it. $33,431.36. So that is the total she paid. That seems like a lot, doesn't it? I'll pull it up here. There you go. That's total federal and state taxes. Any questions? You're already. Oh, it should be. Is that 41 or 31? I should have added it up. I thought I remembered it. 26,038 plus 7303 14. Yeah, it's 33341. I swear I am dyslexic. Three, 4, 1. All right. So far, so good? All right. What was Robin? So we're using the form. This is basically a W-2 form. So this is something that Supervised Department Store gave to Robin Omar to tell, give her income and the taxes, the money that was withheld from her check each year. So this is an annual statement. So if we're looking to see what Robin's total annual taxable wages are, we want to look for that box that says taxable wages. And I uploaded this one because you can read it a little bit better. So this is the wages, tips, and other compensation box. That's the box we're talking about here. So this is box 1. We're writing box 1. And that amount is $65,120.97. Federal income taxes, that's the next box. You'll see you can read this form a little bit better. Federal income tax withheld, that's box 2. And the boxes are literally numbered. Box 2, box 1. So that's $87.65.99. How much did she pay in state taxes? Well, state taxes is not up here. It's along the bottom. Let's show you where it is here. So state taxes, box number 17. And that amount is $7,654.91. And the state and local taxes box is box 19, I'm pretty sure. going to show you on this one to read it a little bit better. So 19, local income tax. And she doesn't have anything in that box because she paid 0 local income tax. If the box is blank, that means did not affect it, did not apply to you. You didn't pay it. Any questions? Okay. Looking at the same form again. How much did she pay in Social Security taxes? So we're looking for that Social Security tax withheld. That's box 4. Remember, it's just a number. It's literally a numbered box. If you're filling out your taxes, it'll tell you where to go. It'll say go to box 4. So you're looking for those numbers. $4,037.50. How much did you pay in Medicare taxes? What box number would that be? Kalani? Can you read it? I'll put up the other. I'll read it from the other side. So we're looking at Medicare taxes. What's the box number for Medicare? Yes, 6. So box 6, and that's $944.25. If we're finding the total amount of federal, state, and local taxes that were withheld, we're just going to add up all those numbers. So that's Social Security, that's Medicare, that's federal tax, that's state tax. She didn't pay any local income tax. So those 4 taxes for a total of $21,402.65. Yes. Say it again. I will in just a second. Everybody's writing right now. I don't want to stop them mid. He didn't have any. The form. It's still going to be titled the same, and they should have the same box numbers, Madeline. But you're right. Those forms could look a little bit differently. They do change a little bit. Sometimes they might look different from one company to another, but the box numbers, titles, and the numbers in the titles will be the same. So here I'm going to go back to what you see. So what were you talking about? Oh, it didn't have anything in this one. I just put this up so you could read the boxes better. Right, but it's always going to have a box 1. It's always going to have your wage, tips, and salary box. All right, so this is a little bit new terminology. FICA taxes, it says what is the total amount of FICA taxes? We have to know what FICA taxes are. FICA taxes are your Social Security and your Medicare. And so you're going to add up the amounts in those boxes. So we're going to add box 4 and 6. Box 4 is $40.37.50. Box 6 was $944.25. So for a total FICA tax paid or withheld, $4,981.75. Any questions? All right. A few more terms. Standard deduction, which we've talked about. The standard deduction for this year, so we're going to do 2025. Can't do no sense in doing 2025 numbers or 2026 numbers yet, right? So we're in the middle of 2026. But we're all getting ready to file our taxes for 2025. How many of you have to file a tax return? Nobody else, just me, Savannah, and Ezra? Anybody else working a job? Right, so you're going to have to file your taxes, right? So your standard deduction, most of us are going to use the standard deduction. Oh, it's not $14,600. This year, it's $15,750 for single filers. It's $31,500 for married filing jointly, which is exactly twice the single. Remember, there is a married filing separately, and I would imagine it's the same as this. I don't really know. I'll have to look on the form. I've got the form pulled up. And then, I forgot what this one is. We're going to have to look. So the head of household, I think it's $23,165. I'll double check that. Where does, hold on, let's pull it up and make sure. Oh, there it is. Yeah, oh, it's $23,625, so let's correct that. $23,625. That's pretty good, though. You know, I can't remember the numbers. $23,625. I'm going to write it down here so it's a little easier to read. $23,625. And that is for the year 2025 tax year. Now, let's go ahead and look here. So this is our 1040 form. Everybody uses this same form. This is our information, so the government, IRS, knows who's filing their taxes. This is our filing status, so they know that as well. More information. Most of you aren't going to have any dependents or digital assets. And then we start here with our income. Okay, so once we get to our, these are our above line deductions. There are some things that we can adjust our gross income with, right? So we may have to increase our income if we get dividends or tips or something like that. You see here it says household employee wages not reported on the W-2 form. So if for some reason you have maybe a side job that didn't get reported, you're supposed to report it here. There are some deductions filled in here too. So a capital gain loss, it would reduce your taxable income or your gross income. And then it brings us here. So we're going to have an adjusted gross income, which is still not our taxable income. We're going to transfer that to line 11B from 11A and 11B, though it should be the same number. And this is where we enter our deductions. Here's some information you got to give, and then we get down to, are we going to use a standard deduction or itemized deductions? Remember, if you don't have deductions totaling more than $15,750, then you want to use the standard deduction. But if you do, like in our assignment yesterday, Jameson had $18,000 in deductions. So he would not want to use, he would want to use itemized. But you'll see here, you have to have other forms if you itemize, right? And that's okay if it saves you money. But then, so this is where you would enter that there. Okay, so itemized deductions, you have the option not to take the standard deduction. Use it to do what saves you the most money. So if your itemized deductions are greater than the standard deduction, then you should use the itemized. You will have to file a separate little worksheet with that or a form, but it will get you a better deal by itemizing and using a more complicated parts of the 1040 form. But they're not that complicated. All right. Tax evasion. So I told you guys not to, if you make a mistake, it's not the end of the world. But if you try purposely to cheat the IRS, out of what you legally owe in taxes, they will prosecute you. You can go to prison. So when you try to avoid paying taxes on taxable income and either don't file or don't file honestly, you are evading taxes. This is a crime punishable by jail time, payment of back taxes, and additional fines. This is one of those times wage garnishment may come into play. Remember we talked about garnishments, where those things are taken out of your paycheck that you don't get to decide on, the federal government does. It's usually from some legal action. An audit. So if you file your taxes and the computer flags something in your taxes that don't look right, or if an investigator or person there looks at something on your return and they do not look accurate, you may be audited. And an audit is just an investigation where they prove that your tax return is correct or not correct. If they think you are purposely trying to cheat on your taxes, it can be very serious. I think that sometimes they just randomly audit people too. Most of the time it's because something is suspicious, but they do also just randomly flag people for audit, I think, or at least I've heard that. I'm no tax expert, but I think that is true. All right, this is actually a little bit outdated. They did change the tax so that we all use the same tax form, 1040, but it's this one here. So these notes say that this is only informational and the back is income and everything, but that's not true. So this is literally, if you're filing your taxes this year, this is the form you'll either edit online as a PDF fillable, you'll print it and write it in by hand, whatever. It starts with your identification information, including your Social Security number. You do not have to do any of these things unless you own a home already. Maybe you do. This presidential election campaign is always weird to me. You can say you want $3 to go to a presidential election campaign. I don't know whose campaign that is. I think it's just in a general fund for just expenses to go with this. I don't really know, and I never do it. But it says that it does not cost you money in any way. I do not do it. You can leave it blank. If it's doesn't pertain to you, or you choose not, for these elected things, choose not to do them, then you just leave them blank. You do have to indicate your filing status here. You guys are all going to go single. I don't know if you have any digital assets. If you won a big prize or property or something, you might click yes there. I don't think any of you have dependents, but at your age you could technically. And then we start here with your income. Remember what we talked about, W-2 box 1, right? A lot of the times it's going to go straight and give you very specific instructions what number goes in there, all right? Get down to, this is all about information and adjusted gross income. Then you go from adjusted gross income to taxable income. Taxable income allows you to find your tax that you owe. Do you have any credits after you find out the amount of tax you owe on line 16? If you have any credits, remember we get to just subtract those straight from our bill, and it tells you here, subtract line 21 from line 18. And then this is your total tax. Now look down here. It says federal tax income, tax withheld from Forms W-2, Forms 1099. They go in these blanks. Tells you exactly what to do to determine if you have a refund or if you owe money. Don't forget to sign it. Fill out the rest of the parts. If you get a refund, you can have it deposited directly into your account. And it's quicker that way. All right, I think I'm done. You can scan and submit them if you like.